Good morning from our global headquarters in New York City. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. A balancing act. The Fed decides today. Tension between growth and inflation cloud the outlook. Trade talk optimism. Futures gain as representatives from the U.S. and China are set to meet this week.
The Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. We don't want to decouple. What we want is fair trade.
And unease in South Asia. India and Pakistan trade military strikes after a deadly attack last month in Kashmir. Well, it is Fed decision day, and we had 2 straight days of declines for this equity market. We attempt to undo that today. We are higher by 0.6% for both the NASDAQ and S&P 500 futures session. This gain likely having to do with those headlines that it appears we are getting closer to the U.S. and China reaching some sort of negotiations. That's set to happen in Switzerland. For this bond market, we had a solid 10-year auction yesterday. Yields moved lower yesterday. That, again, backtracks this morning. We are higher. All eyes on the Fed at 2 p.m., higher by 3 basis points on your 10-year yield at 4.32. 3 basis points as well for your 2-year yield. We're now pricing in less than 3/4 rate point cuts for 2025. Those are your overall markets. Let's get some stocks to watch this morning. Joining us is Bloomberg's Joe Easton. Hey, Joe.
Morning, Danny. So seeing a big gain in Novo Nordisk's ADRs today. The company actually downgrading its sales guidance due to competition for the obesity drug Wegovy. However, analysts saying this is already priced in after the stock fell about 50% over the past year. Then we're also looking at AMD, the semiconductor company with around a 160 billion market cap, warning of a hit from China tariffs, but actually the CEO playing up the prospects for AI on an analyst call. And we have actually seen the stock recovering overnight. We're seeing that one, Advanced Micro, up 2% today. Then another big day in earnings. Disney is out. We're looking for subscriber growth in Disney Plus and ad spending, and also Uber, potentially any news on their robotic devices and taxi business. Keep an eye on that one. All of this on the Before the Bell opening wrap, as usual. Danny.
Joe, thank you very much. Bloomberg's Joe Easton, who will be back with us later in the hour. Also this hour, in just moments, we're going to be speaking to Jane Foley of Rabobank. Later in the hour, we'll catch up with Andrew Hollenhorst of Citi ahead of the Fed decision. And as the Fed decision comes closer, 2 p.m. today, Jane Foley, head of FX strategy at Rabobank, writes, on the back of Trump's trade war, Rabobank now sees the chances of a U.S. recession as being larger than 50%. That said, in view of the inflationary risks associated with tariffs, we don't expect the Fed to be able to cut rates as much as the market is expecting. Jane, I'm pleased to say, joins us now. Jane, gotta say that sure sounds like stagflation. Is that your base case?
It certainly does sound like that, doesn't it? Yes, and we've got some negative growth numbers penciled in for the US from the end of this year. So, looking at that, plus the inflationary aspect, that does indeed sound like stagflation. But of course, I think like everybody else, we're pretty on the consensus for today's Fed call, because, what can Powell really say? The data today has been really not too bad. And like everyone else, I think we think you want to get off that stage and that press conference as quickly as you can.
It's been really interesting to look at the dollar through all of this, Jane, because the drivers seem to be ones that we don't typically associate with the dollar. For a bit, it was concerns of higher yields and policy uncertainty. The dollar strengthens today, likely because we're going to get talks between the U.S. and China finally. Do you expect this to continue to be the driver, whether or not tariffs are on and or off, or the degree of tariffs?
Well, it is interesting, isn't it? The last couple of weeks, good news has been positive for the dollar, and that, of course, is really counter to what we had previous to the Rose Garden address had associated with the safe haven dollar. But, one thing that I think is really worth pointing out this week is that reaction, for instance, in the Taiwan dollar that we've had this week, a sharp movement in the Taiwan dollar, this perception that perhaps in Asia, as part of those trade negotiations, a stronger currency and a weaker dollar could be offered along the lines of what we were hearing a lot of chat about over the first part of this year, and that being, some sort of Mar-a-Lago Accord, whereas the US authorities may want a softer dollar. So those sort of indications are sort of very much in there, certainly this week, and that could really temper the stronger dollar reaction on the news that there will be some talks between China and the US.
So tempers stronger dollar reaction, Jane, but in favor of what? You've been writing a lot recently how some of the optimism of the euro might be overdone.
Well, you know what? I've heard so many stock allocators, the last few weeks. Really, I think we can probably go back into March and talk about, the fundamentals have changed, for the Eurozone, that loosening of the fiscal debt rate, for instance, in Germany. And I think we can also talk about the change in fundamentals in Japan, an economy that's emerged from 30 years of deflation, or is emerging and trying to emerge from that period. And from that point of view, I think with the market talking about recession for the US, investors are saying, well, look, the US stocks are certainly not the only story in town, which may have been the view, last year, the year before. There is opportunity in Europe. There is opportunity in Asia. But for Europe, I think there is a possibility that move into the euro could be overdone because we've still got the Bundesbank talking about recession for Germany this year. Most forecasters aren't expecting that fiscal impulse to really push growth higher in 2026. So it is possible that there's been just too much optimism for Germany right now.
Speaking of too much optimism, Jane, another currency that has really benefited has been the Swissy, the Swiss franc versus the dollar, up some 10% just thereabouts this year. But this is what we heard from the SNB just yesterday. The SNB president saying the franc appreciated really a lot. We always said we'll intervene in FX if needed. We haven't ruled out cutting rates to zero or negative rates. Can you keep buying given that?
Well, I mean, we did see the Swiss franc fall on the back of those comments. Now, these comments aren't new. The Swiss National Bank has maintained an FX intervention policy for years. It used to say, well, look, we can't do quantitative easing in Switzerland because we don't have the depth of those capital markets. So we have FX intervention as a tool instead. So that's, how long this policy has been repeated by them. But they haven't intervened for a year or so. And, that there is the risk that if they do intervene, then the US Treasury could call them out as a currency manipulator, which won't be something that they clearly want. So that's not an optimal solution, even though it's a policy tool. And negative interest rates also have their costs. So they don't necessarily want to do either. I think last year they were quite proactive in their rate cutting cycles in order perhaps to avoid the situation that they're in now. But I think we will get more verbal intervention. And I think come their next policy meeting in June, we'll probably get interest rates at zero, and they may be forced to push them into negative territory later in this year as well.
I mean, I can't believe we're talking about ZIRP again, Jane. It feels like so long ago, and we've come so far. Listen, Jane, before I let you go, I just want to talk about Taiwan and the Taiwanese dollar. It has certainly stabilized in the last few days, but we saw this huge appreciation in it. And I wonder if there's any lesson to be learned that maybe it acts as some sort of canary in the coal mine, that there are a lot of assets that are unhedged to the dollar, and that we might get other instances like this coming through this year as we see some of that weakness coming through the greenback.
I think this week, really, Asian currencies have really been in the thick of things. They're really quite interesting. And I think this is, in part, still some of the repercussions of these trade talks. What is going to come out in these trade talks? But it's also another part of this story is the asset flow out from the US. This perception that there are other pro-growth stories in other parts of the world, that the US stock market is not the only game in town, and asset managers are really trying to find different growth stories here. And I think this is just another sign of that. So the market has been moving into euro, moving into Japan, moving into other parts of Europe, and the dollar, the sort of the glimmer that the dollar has held for so many years has certainly dulled. And I think what's happened in Taiwan and Asia is just another part of that same story.
Jane, so wonderful to have you this morning. And we love looking at the new headquarters over at Rabobank. Looks like a very spiffy over there. Jane Foley, thank you so much for joining us, Jane Foley there of Rabobank. Okay, let's get to some other top stories that are trending on the terminal this morning. Novo Nordisk shares are higher by 6.5% this morning, even despite an earnings miss. The company's CFO said that he expects a step up in the second half on the back of lower competition. The pharma giant has been losing ground to Eli Lilly in the obesity shot market. Novo trimmed its financial forecast for the rest of the year. Elsewhere in earnings, BMW's EV sales in Europe helped reduce a decline in earnings in the first quarter. The German automaker faces challenges from slumping demand in both China and the U.S. and U.S. tariffs, but it said stabilization of inflation and interest rate cuts will boost demand this year. Shein and Temu both saw double-digit sales declines in the week after they hiked retail prices to cover the cost of increased U.S. tariffs. Credit and debit card data analyzed by Bloomberg reveals that Shein posted a 23% drop in observed U.S. sales between April 25th and May 1st. Coming up, China and the U.S. gear up for talks. The two nations aim to de-escalate the tariff standoff as both travel to Switzerland this week. We have the latest on your Bloomberg Brief after this break.
The Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. And, look, we have shared interest that this isn't sustainable, as I said before, especially on the Chinese side.
Treasury Secretary Scott Bessent speaking on Fox News. China confirming the scheduled talks, with the foreign ministry spokesperson saying that Beijing will, quote, safeguard its interest in the talks with the U.S. and that the U.S. should stop threatening if it wants a deal. Joining us now from Shanghai is Bloomberg's Alan Wan. So, Alan, we had the Treasury Secretary saying that they've agreed to talk, and then on Saturday and Sunday, we will agree what we're going to talk about. So, talks to talk about talks. How close are we getting to this being a reality?
Well, I'll tell you what. I mean, the good news is that they're finally talking, right? Both sides are actually confirming that they're going to talk after weeks of denials, right? You had Trump saying that he wanted direct talks with Xi, and Beijing saying that no, you've got to follow protocol. So it's a good thing that they're talking, but these talks are just going to lead to probably protracted talks. The bad news is that, and one of the reasons why stocks sort of paired during the day in China, is that few people expect any breakthroughs from these talks. And today, with the PBOC and other ministries actually cutting policy rates, cutting RRR, they're getting the Chinese economy ready for protracted negotiations. They're trying to make the Chinese economy more resilient in the event that no deal will be made in the next several months.
I want to get to that PBOC support package in a bit, Alan. But first, just on this sort of idea, we're going to have Bessent and Jamieson Greer heading to Switzerland for these talks. What is the threat, and perhaps this is kind of what you're alluding to, that China realizes that as long as one man isn't in the room, that is Donald Trump, that all this could be undone?
Well, I mean, definitely. This happened during the first Trump term, where, what was it, Liu He thought that he had a deal, and then President Trump decided to back away from it. So there's always a concern that whatever Greer and Bessent agree on with He Feng, the vice premier, that it can be easily undone by President Trump. I mean, he himself has said that he will set tariff levels himself, and also there's a concern that these talks could go badly as well. There's always that concern, right?
Yeah, certainly. And just a programming note for our audience, one to watch out for before those talks, 10 a.m. Eastern, there's going to be live coverage of the Treasury Secretary Bessent's testimony before the House Financial Services Committee. So, Alan, we're going to hear from the Treasury Secretary today. We already heard from China earlier. You mentioned the PBOC support package. What exactly did we get?
Well, I mean, it was a lot of people were happy. They were impressed with the package, the size of the package. The PBOC cut the RR rate, releasing 1 trillion yen of funds. They cut the policy rate as well. They cut the relending rates. All this to support the economy, ensuring that liquidity is loose and there's money available for a lot of these small and large manufacturers if they're facing pressure from all these tariffs and slowing trade. But one issue is whether or not monetary policy loosening is enough. A lot of economists are also calling for fiscal measures as well. I mean, that could be determine whether or not we saw this mild gain today become maybe a much larger rally.
Yeah, fair enough. Alan, thank you so much for joining us. Appreciate your time. That is Bloomberg's Alan Wan. Coming up, escalating tensions in South Asia, Pakistan and India trade military strikes. We'll have the latest for you next on your Bloomberg Brief. You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you some front page news and see what's making headlines around the world. First up, the Washington Post has this on their front page, beginning with the conclave in Rome. As the Catholic Church elects a new pope, cardinals under the age of 80 will enter the chapel to begin voting later today and won't be released until a new pope is found. Next up, the Journal has this reporting on their front page that the U.S. is stepping up its intelligence gathering efforts around Greenland. Journal sources reveal that several high-ranking national intelligence officials sent a directive to spy on Greenland's independence movement and learn more about attitudes towards America. And basically every front page leading with this morning, including the New York Times, with India striking Pakistan and the latter country vowing to respond. The strikes follow 2 weeks after a terrorist attack killed 26 civilians in Kashmir. Let's stay on this story. For more, we are joined by Ruchi Bhatia, South Asia economy editor in New Delhi. Ruchi, thank you so much for joining us. What have been the developments in the last few hours?
Well, India said that it has conducted military strikes in Pakistan, and Pakistan, on the other hand, said that they have downed 5 Indian fighter jet planes, and this is an escalation of the two nuclear-armed nations. The tensions have been simmering for the last few days, ever since 26 people were killed in an attack in Indian-administered Kashmir, and since then, this was something that we were anticipating for a very long time. Remember, Prime Minister Narendra Modi had vowed to retaliate. He had said that the perpetrators of this crime will be punished, and that's exactly what India has done. In fact, in the early hours of Wednesday, India said that they had hit 9 military targets, but they said that this was a very precise and restrained action from India's end. As far as Pakistan is concerned, they have said that if India, escalates the situation, they will not back down. They will look to retaliate. This is really a lot of tough talk that we're seeing from both the sides. In fact, various global leaders have also reached out to both India and Pakistan, including top leaders from the US and Russia, asking both the countries to show some restraint, look for a dialogue and look for a peaceful solution to this crisis. Having said that, remember, as I said, these tensions have been simmering for a very long time. We did see tit-for-tat measures from both ends, with the expulsion of diplomats, the scrapping of the decades-old water-sharing treaty, as well as and closure of airspaces. So this is something that we're keeping a very close watch on. Today we had the Indian Prime Minister chairing a cabinet committee on security meeting. On the Pakistan side, we also saw the National Security Committee meeting as well. So the tempers are really flaring up on both sides at the moment.
It also comes at a very delicate time politically for India, Ruchi, as they try to engage in U.S. talks over trade, over fears of what tariffs might do to the U.S. economy. What is the economic outlook if we do see some sort of escalation in this conflict?
Oh, absolutely. This has not come in at a good time at all, not only for India, but also for Pakistan. For India, for example, we're in the midst of trade talks with the US. India just concluded the free trade agreement with the UK just yesterday, and its economy as well is not growing at the kind of 8% levels that we saw in the last few years. In fact, growth this year is set to be just about 6.5%, though India will still be one of the fastest growing economies in the world, but growth is slowing down. expansion is slowing down, and that is a big worry for India. On the other hand, for Pakistan, the nation that was just coming out of the crisis after it almost averted a default in 2023, we're seeing the IMF board will be taking up the loan of almost $2.5 billion for Pakistan on the 9th of May. So the timing for both the countries could not have, couldn't have been good. Having said that, there is a serious risk that if this escalates further, then there's going to be an economic cost that both the countries will have to bear.
Ruchi, thank you so much for your coverage this morning. We really appreciate it. Ruchi Bhatia in New Delhi. Now, even with the geopolitical strife, we're not seeing really a reaction in many haven assets. In fact, gold dropping quite a bit this morning, down 1.7%. Instead, gold and, let's be honest, most risk assets have been trading in line in the progress of U.S. and China talks. Gold gets a bid when it seems like tariffs will be on. Some confidence this morning. There'll be talks about U.S. and China tariffs. So that meaning gold at $3,300. Coming up, we count down to the Fed. Headquarters in New York City. Welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. A balancing act. The Fed decides today. Tension between growth and inflation cloud the outlook. Trade talk optimism. Futures gain as representatives from the U.S. and China are set to meet this weekend.
The Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. We don't want to decouple. What we want is fair trade.
And unease in South Asia. India and Pakistan trade military strikes after a deadly attack last month in Kashmir. Let's get to these markets. It was 2 straight days of declines. We try to undo that this morning as we work through that with U.S. and China trade talks getting closer to reality. We're up about 0.5% for both the S&P and NASDAQ 100 futures session. For your bond market, it was a decent 10-year auction yesterday. Lower yields yesterday give way to higher yields this morning. We're up about 2.5 basis points for your 2-year yield at 3.8. Your 10-year yield up 2 basis points at 4.31. The main highlight, 2 p.m., the Fed decides, currently pricing in about 3/4 point rate cuts for 2025. Those are your markets. Let's get some stocks to watch. With that, and back with us is Bloomberg's Joe Easton. Good morning, Joe.
Hey, Danny. So Novo Nordisk ADR's looking really strong in the pre-market today. The company actually missing expectations on its obesity drug sales in terms of the forecast, but analysts saying this is pretty much priced into the stock after it fell around 50% on a 1-year basis. So Novo ADR's now up around 7.4%. Then over in the chip space, advanced micro devices. This one actually did look a little bit weak in terms of the sales because of the restrictions on sales to China, but actually the AI impact seen as a boost for the company. The CEO was talking about the strength in AI demand, and therefore we're seeing the stock rebounding today. Then in terms of the earnings, we're looking at Disney. Potentially we are going to see a drop down in subscribers, but the price is going up, so look out for those earnings for Disney. And also Uber with that robotic taxi partnership with Alphabet in the spotlight ahead of earnings from both of those companies. Both of them just seeing small gains ahead of those reports later this morning, Danny.
Some of the stocks to watch out for today. Joe, thank you so much. Bloomberg's Joe Easton. Also on deck today, 2 p.m., the Fed's third rate decision of this year. We caught up with Apollo's Torsten Slok on his expectations for the rate path ahead.
We do know, because of the trade war, that inflation will be going up roughly around 1 percentage point over the next 12 months, according to the Tax Foundation and the Yale Budget Lab. So if that's the case, they should be keeping rates higher for longer. And if growth is slowing down, of course, they should be cutting. But the dot plot, Danny, to your question, is to some extent revealing that they do think that the next move should be lower. So that is, in some sense, telling you that they're leaning towards cuts.
Joining us now is Andrew Hollenhorst, Chief U.S. Economist at Citi. Andrew, great to see you. We can talk about the look forward in a moment, but just is this going to be a snoozer of a meeting this time around?
I think Chair Powell and the committee would like it to be one. I mean, they're really just in wait-and-see mode. There's so much uncertainty about policy, so much uncertainty about the economy, so just trying to keep options open and not do anything at this meeting.
Yeah, just don't tell surveillance I said that. We'll have their special, which everyone should tune into, by the way. So in the look forward, because maybe that's more important in understanding the reaction function from here, it's the classic goalkeeper's dilemma. Dive right for growth, dive left for inflation. Left for inflation. I got my left and right wrong. Which way should they go? What are they going to be prioritizing, this Fed?
I think what they have to think about is what is going to be the persistent shock to the economy? Are we going to have persistent inflation? Are we going to have persistent higher unemployment? And it's really difficult to make that judgment because they tried to do this a couple of years ago. They thought inflation was going to be transitory. It turned out not to be transitory, but I think it's a very different situation now. We have demand that's cooling. We have a shock that is actually going to cool demand further. And that means that it's hard to get inflation going in a persistent way. We will see inflation. Torsten is absolutely right. We have higher tariffs. That's going to raise the cost of goods. That should boost inflation. But it should be really a one-time inflation. I don't think we're going to hear that from Fed officials today. I think they're not going to want to make that conclusion today. But I think that's where we'll end up. That means they lean towards unemployment, the labor market mandate, and that means they're cutting rates later this year.
How bad does it need to look in the labor market for them to start to vocalize this?
So what we heard from Governor Waller, and he does tend to be a little bit more dovish than the rest of the committee, is if the unemployment rate is going up 0.2 of a percentage point per month, that would be something that would concern him. Right now, the unemployment rate has just been stable for the last 6 months or longer, so that's why they can just be in this wait-and-see mode, and I think they stay there. If we start to see that unemployment rate that looks like it's going to go above, say, 4.5%, then I think they get worried and they start cutting.
What is your assumption in just where the unemployment rate could go? Because we have seen this remarkable strength in the labor market that, for the past few years, I think has surprised most.
Yeah, we've been surprised. The unemployment rate has crept higher, but then, like I said, it's really just stabilized here. I think what we're seeing now is an economy where the layoff rate is really low. So it's not that a lot of people are getting pushed out of jobs, but the hiring rate is also low. So it's hard to get a job if you're not in a job. And that makes me concerned about hitting this economy with a shock that is going to lead to lower hiring, maybe even some layoffs in some sectors. And we know we'll have some government layoffs as well. And that means that those individuals will have a tough time getting jobs again. That means the unemployment rate will creep higher. So we think the unemployment rate will go up to something like 5% over the course of this year. Again, huge uncertainty around that. But that upward trajectory, that's what's going to concern the Fed. That's what would get them to cut rates.
Well, it's really interesting because in Scott Bessent, the Treasury Secretary's pitch to investors at Milken, he said this idea that, look, you're worried about the economy, but it's not just tariffs. It's a three-legged stool. We'll also have tax cuts and deregulation. If we do get that coming out of the White House, does it help alleviate these pressures at all? Or is the damage done and the unemployment rate and the labor market still likely has some cooling to go from here?
Well, I think there is a timing issue there where tariffs have increased already. Uncertainty around tariffs has already gone up. That means firms are already going to be pulling back. We're thinking about this fiscal bill, which is moving through Congress now. Maybe getting passed this month, maybe more likely getting passed sometime in July, really becomes effective and starts changing the economy at the end of this year into 2026. So there is a timing issue there. And then there are also big questions about what will be in this fiscal bill. We know that there'll be an extension of the existing tax cuts. Will there be new tax cuts? What's going to happen with spending? Still a lot of questions to answer there.
Over the weekend, Mark Carney, now the Prime Minister of Canada, made a really interesting comparison between the U.S., what it's going through now in Brexit, and of course he knows a thing or two, being at the helm of the BOE at the time, basically saying that this is a comparable environment to Brexit, where you reduce trade relations and you get slower growth, higher inflation, higher interest rates, volatility, weaker currency, and a weaker economy. Is that an apt parallel, this idea that it's not a sudden shock or a crisis? It's just kind of an environment where everything gets a little bit worse.
I mean, I think Brexit was a somewhat different scenario where there was this long period of negotiation before the UK really fully exited. Whereas in this case, we know that tariffs went up very quickly. So I think that this will be a more direct, a more acute shock to the economy. So that could mean that we see more in the data up front. And that was one of the surprises with Brexit, I think, is that it took longer for things to materialize in the data. This could happen more quickly, but also because of the acute nature of it, it could move through the economy more quickly as well. So I think there are some parallels there, but some important differences.
So this idea that we're on the precipice of change, that it's a regime shift, and then after this, everything is different. Dollar is a bit weaker, things are different. Is that not necessarily the case if it works through the economy quicker?
Well, I think that the question is, do we stabilize at relatively low tariff levels? Are we going to have 10% tariffs with most countries and things just stabilize there? And then you could kind of see the economy stabilizing, or are we entering now a prolonged period of uncertainty with tariffs that are potentially much higher? And that's really still to be determined. That's going to depend on what happens with policy over the next few weeks and the next few months.
Can I just get, before you go, one of the persistent questions, and I wonder what your answer to the puzzle is. It's just the gap between the soft and the hard data. Has something changed in the survey data? And the Fed has kind of hinted that they think this might be the case, that something's changed in the survey data, and it's just not as a reliable indicator of where the economy goes.
But just empirically, just looking at the data, after COVID, we know that the soft data has not been as good a guide for the hard data. Sometimes, and I think economists always think this, sometimes people tell you things, but then they do different things than what they tell you. Right now, though, we are seeing pretty consistently across the soft data this kind of downshift, and we hear that in corporate anecdotes as well. So there's a lot of kind of mutually corroborating factors right now that make us think the hard data will follow the soft data lower, but to be determined.
Yeah, all those consumer companies really starting to sound concerned about where things go from here. Andrew, thank you so much for joining us. We always appreciate your time, especially heading into a Fed decision. That is Citi's Andrew Hollenhorst. Coming up, U.S. and Chinese reps prepare to meet in Switzerland later this week. We're going to have more on the trade talks next on your Bloomberg Brief.
The Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. And, look, we have shared interest that this isn't sustainable, as I said before, especially on the Chinese side.
Treasury Secretary Scott Bessent speaking on Fox News as the U.S. and China look to de-escalate trade tensions. China's foreign ministry spokesperson saying in the daily briefing earlier that Beijing will safeguard its interests in the talks with the U.S. and that the U.S. should stop threatening if it wants a deal. Bloomberg's James Mager now joins us out of Beijing. James, what are we expecting from the talks this weekend?
I think the expectations are that, while there's not going to be a deal announced after this first meeting, there is going to be, substantial talks. They've set aside 2 days for the meetings. Hurley Feng, who's the vice premier and is in charge of economic policy across China, is going to be traveling to the meeting. The chief trade representative, or the chief trade negotiator, is also going. He's just been appointed to that role. And obviously Scott Bessent and Jameson Greer are also flying halfway across the world for these talks. So I think on both sides there is an expectation that there will be some real discussion. Obviously, Scott Bessent there on that interview was saying they're looking to de-escalate the tensions, or de-escalate the relationship a little bit, to put it on a better track. But he also did say after that they are still looking to decouple specific sectors of the U.S. economy from China. He specifically mentioned pharmaceuticals, steel, and semiconductors. So, the expectation that this is the first meeting that the two sides have had really since Donald Trump came out with the tariffs, or since Donald Trump actually took office in January. And so, hopefully they will sit down, get to a place where they can actually start talking to each other, and hopefully over the next couple of weeks and months, we'll see an improvement in ties between the two, which hopefully will lead to a reduction in tariffs. But it's very early days yet.
Very early days. And James, just to reiterate what we heard from China overnight in their briefing, saying that the U.S. should stop threatening if it wants a deal, and that the U.S. should show sincerity. Is there still a disconnect between China and the U.S. and the willingness at this point to reach some sort of agreement?
That was a response to my question earlier today. And what I was asking about was China initially had said, we're not going to talk at all unless you remove all of the tariffs that you've put on us since January. So, this agreement for the Chinese to go to Switzerland to meet and to talk for 2 days with the US is already a step back from their initial maximalist negotiating stance, where they said, unless we go back to the tariffs where they were on January 19, there is no discussion at all. So I think there is a willingness on the Chinese side to deal. By making that change in their stance, they're showing they're willing to at least meet halfway, or at least halfway around the world. But there is also, they do want to be treated with what they term respect. They don't want to go into a meeting and be treated like Vladimir Zelensky was when he went to the White House. They don't want to be publicly humiliated like Mark Carney seemed to have been in the Oval Office yesterday. And they do want, if the deal is done, if they agree a deal at some point with Scott Bessent or Jameson Greer or whoever the U.S. chief trade representative is, they do want to have the surety that deal will be actually fulfilled and isn't going to be suddenly changed. And I think also another thing they do want is they're not just negotiating about the Liberation Day tariffs that President Trump announced in April. They also want reductions or the removal of the tariffs that put on China, because the U.S. claims it's responsible for the fentanyl pandemic. And they're also quite concerned about the other tariffs on things like semiconductors, pharmaceuticals, and auto parts that are meant to be coming in the next few days. So, there's a lot of different things that they will be wanting to talk on, but they are concerned about those things that they express. They want to deal, to discuss this as equals, and they really don't want to be surprised.
James, thank you so much for that. Really great to get your thoughts after that briefing. That is Bloomberg's James Mager. So we've heard from the Chinese. We will hear from the Treasury Secretary Scott Bessent. A live coverage of his testimony before the House Financial Services Committee begins today on This Morning. Now, here's a stock that we've been keeping our eye on. Novo Nordisk is getting a really big rally this morning, up nearly 6% in the Danish trade, despite an earnings miss and a guidance cut. The Danish drug maker expecting the competition for its blockbuster obesity shot, Wegovy, will subside later this year. Bloomberg caught up with the CFO earlier.
The key backdrop on obesity is that this is a market development strategy. So right now, if you take it in the U.S., then we're only looking at a few million patients being served by the industry in the U.S. on branded pharmaceuticals for treatment of obesity, out of a total potential of 110 million. So this is a market built, and as a consequence, really not a price or market share competition at this point in time.
Bloomberg's Sarah Sholin joins us now from Copenhagen. Sarah, can you circle this square? Both a guidance cut, yet at the same time saying competition will be less for them.
Yeah, I think we were all surprised to see this morning how the shares were performing. We had heard the guidance cuts, we saw how there was an earnings miss, and then when the market opened, we really saw shares started to rally, and as you said, they're up almost 5% here in Copenhagen. A part of this explanation is, as the CFO also alludes to, there is still a lot of potential for Wegovy, a lot of patients that they can still get on it. They're taking steps to widen their offering in the US. They just made a deal with CVS Health last week to put them on the preferred list, so more will become available to more patients. Novo Nordisk is also trying to get into telehealth, and they're expecting to see less competition from some of these compounding, essentially these copy products that really have been squeezing a little bit in the first quarter. And some of the investors, they're talking about this as a buying opportunity. The stock has really plummeted over the last 6 months. So now when we have a bit more visibility and now we know what we can expect in terms of their guidance, there's a bit of a relief.
There has been also a lot of pressure coming from the likes of Eli Lilly's and others, Sarah, over fear of what happens when someone else develops a pill. What happens when someone else makes progress ahead of Novo Nordisk? How big of a threat is that for the company at this point?
Well, if you ask Novo Nordisk, they're saying that the cake is basically big enough for everyone, and this is expected to be a really, really big market. Novo Nordisk has seen competition really heat up with Eli Lilly over the last 3 months. Prescriptions have been higher at Eli Lilly. They've seen more growth, but they're both trying to develop obesity pills. They have new products in the pipeline, and it's really too early to say who's going to win this race, and most investors and analysts do believe that there is room for more competitors to come in.
Sarah, thank you so much. That is Bloomberg's Sarah Sholin. And we've also got our eye on Disney this morning. Shares are higher in the pre-market trade ahead of its fiscal second quarter results later this morning. Those shares up 1%. Joining us to take a look ahead of them is Bloomberg Intelligence media analyst Geetha Ranganathan. Geetha, great to see you this morning. Thanks for getting up early for us. What are you expecting from Disney today?
Yeah, thanks so much, Danny. So Disney is a really complex company, right? There are so many different moving parts. I think the biggest source of investor concern is really going to be any commentary around the theme parks. I think the quarter that they're going to report, we're going to see fairly resilient theme park demand. As far as streaming is concerned, I mean, this is again another area that is fairly positive for them because remember, they've really kind of doubled down on streaming profitability. So even though you're going to see them lose some subscribers in the streaming segment, profits are still going to be pretty strong. And I think ultimately what we're going to see is that, as far as fiscal 2025 is concerned, I think their guidance for high single-digit EPS growth is pretty much intact. But again, I think, Danny, it's going to come down very much to that commentary on theme parks because this is really sensitive to the, the health of the economy, to consumer sentiment. And again, remember, theme parks brings in about 55 to 60% of the total company's profit.
Not to mention it operates two resorts in China. Geetha, I'd have to imagine that anything trade-related will be top of mind, especially after Trump's Truth Social post earlier this week saying an 100% tariff on films not made in the U.S. Now, there's a question of how that would actually be calculated. What do you expect Disney to say in regards to what an impact could look like for them?
Yeah, it's really, really hard to tell. I mean, that was a pretty cryptic post. We don't know, exactly the 100% tariff or what exactly it's going to be imposed on, whether it's just going to be movies, whether it's going to be, TV shows, whether it's just going to be theatrical releases. So a lot yet to be kind of determined there. But I think Disney has a lot of different levers that they can pull. That said, for any studio, including Disney, remember, there is this big threat of, yes, President Trump could have those 100% tariffs, but then what about retaliatory tariffs? Because, for most domestic studios, if they, generate about $1 billion in domestic box office, they're generating about $3 to $4 billion globally. So it could actually have, a reverse effect and completely backfire in terms of supporting the entire movie industry. So we've got to be a little bit careful. But I think Disney, Danny, has a lot of different levers that they can pull. They've been doing a really good job on the cost front. They've slashed their content budget from about $33 billion just a few years ago to $23 billion this year. So I think overall they are in a very good place. But again, I think a lot of the commentary is going to come down to, of course, as you just pointed out, tariffs and the overall health and what that could have, the impact that could have on the business.
All right, we'll see what they say. The report comes before the market open. Geetha, thank you so much. That is Geetha Ranganathan of Bloomberg Intelligence. Coming up, we're going to set you up for your trading day on this Wednesday. We got earnings and a Fed decision. That's next on your Bloomberg Brief. Let's get you set up for your trading day on this Wednesday. We're going to have some earnings before the bell. Both Disney and Uber will report. Then Treasury Secretary Scott Bessent will be testifying before the House Financial Services Committee. That's at 10 a.m. Eastern. And then it will be the main event. The Fed will announce its rate decision at 2 p.m. That is followed by Chair Powell's press conference at 2:30 p.m. So risk markets are higher. We are seeing a rally in futures. Check out what gold is doing this morning. It is down 1.7%. It's still at a very high level. It keeps hitting record after record, just above 3,300. But it is every time we get indications of moving further on U.S. and China talks. That seems to be what's dictating the price of gold as we back off on that with representatives from the U.S., including Scott Bessent and Jameson Greer, meeting with Chinese representatives in Switzerland over the weekend. All right, that is it for Bloomberg Brief. Surveillance will start the countdown to the Fed. This is Bloomberg.